Hi traders, welcome to the new weekly forecast for the trading week beginning on November 4th. Now, the traders who love to trade on high volatility, you can't ask for more. In the coming week, we have multiple events. 4th of November, we have US presidential elections. November 5th, the result is anticipated to be out. Also, we have Reserve Bank of Australia coming up with monetary policy, Bank of England coming up with monetary policy, and the US Federal Reserve. So, the coming week is gonna be a roller coaster. Now, let's surf through the charts and find the tradable opportunities. Now, here, as usual, I'll start with dollar index and I'll go to the daily chart. In fact, I'll start from weekly, and here, based on weekly magnetic zone, so which I have derived from multiple Fib extensions and the Fib retracement levels. So I have marked two major magnetic zones here. So the number one zone is around this area, which is approximately between 105 to 107.9. So this is the band I'm talking about. It's gonna play as key resistance, and the key support is around this area, which is between $99 to $100 mark. Now, dollar keeps ranging between these two major support and resistance areas. Now, because of US elections, it is highly anticipated that dollar will remain elevated at least until US elections are done, or maybe until the new federal interest rate announcement. So, short-term view of dollar remains bullish. I'm going to explain in detail now. So, I'm going to zoom in to the chart on weekly frame, and here dollar is clearly moving up. It reached to this area, the support zone, which is in between 99 to 100, got a sharp bounce, and the bounce has given this short-term bullish direction to dollar index. Nothing against on the weekly frame. The buyers are safe because histogram is getting stronger. No signs of divergence, no signs of any loss of momentum on weekly frame. Now I'm moving to daily chart. Now, based on daily chart, this is the massive bounce we got from the support zone. Now dollar index has reached an important area of resistance, and on Friday we got the non-farm payroll announcement. US has given only 12,000 new jobs, so the numbers are quite weak. In spite of a bad report from US market, the dollar has not crashed. It means although dollar is technically sitting at a major resistance point, but there are no sellers for dollar in the market, which means there could be some consolidation at the given level here at the current price level. Then it may continue and complete its journey, complete its bull run, and enters into the major resistance area, which is anticipated in between 106 to 107.9. And after the announcement US Federal Reserve's interest rate, we can expect that dollar can get weaker. So in the short run, dollar remains stronger. I'm moving to 4-hourly chart now. Even on the 4-hourly chart, this is the technical setup. So we got major buying in dollar, US dollar, and now it has started consolidating. Means this is the key resistance area, but I have not seen a crash in US dollar in spite of a very bad report from from US regarding to the non-farm payroll announcements, the new jobs, which means that dollar will remain stronger in the short run and complete its technical setup. Moving to 1-hourly chart now, and even on the 1-hourly frame, you can see that after we got this bearish divergence, the BOS was completed. I'm talking about this divergence here on the chart on 1-hourly frame, but the sellers did not push it deeper. In fact, we also got bullish divergence, and the buyers have completed the bullish BOS as well. So dollar remains range bound. So the short-term range could be, I'm marking the highest level here. So this is around 104.4, and ranging from 104.4 to 103.75. So this is the short-term anticipation that dollar can remain range bound and then it can move up to the higher resistance level. Now let's move to the next instrument, which is pound versus US dollar. Now we have interest rate announcement coming up from Bank of England, and it is expected that they are going to drop the rates. So I believe that pound will remain weaker until the interest rate announcement is done, and the technical setup is also validating the same point of view. Now here I'll start from weekly. In fact, I'll clean up my chart. Now based on weekly, so what I've done here, I've taken this high, the next high is a lower high, and from this bottom we are getting higher highs. Now I'm going to apply Fib retracement first, so I'll cover from the highest point to the lowest point. In fact, pound USD, it reached to an important resistance level, which is here. That's FR 80%, and we got the bearish divergence too. Now I'm comparing these two highs, higher high pattern. On MACD lines, they have completed the bearish divergence, but the BUS level is quite deep, so I'm not expecting BUS to happen so easily, and this is around 1.2100. Now let's move to the lower time frame, that's daily. And on the daily time frame, we got another bearish divergence, which was printed on the daily chart. So this one is quite strong. We have MACD lines giving bearish divergence and MACD histogram giving bearish divergence at the same time. Plus the sellers, they have completed the BUS, and it's still moving downwards. So no signs against in the bearish momentum. In fact, I'm going to apply a rising trend line here. I'll be connecting a trend line here, and the sellers, they have breached the trend line, and currently pound dollar is trading slightly lower than FR 61.8, that's 1.2920. Now moving to 4-hourly chart. Now based on 4-hourly time frame, if you look at the pattern here, we have got a sequence of lower highs. So this is double top, then lower high, lower high, lower high, lower high, and the next lower high. And here we got a sequence of lower lows. Now if you see the last two lower lows, we've got MACD lines bullish divergence, but no divergence on MACD histogram, which means there could be short-term pullback in the upward direction, but it should be taken as corrective and then continuation in the downward direction. It happened so the buyers, they pushed the price to this trend line level, got rejected, could not break this high, could not break the previous sequential highs here, lower highs, and the sellers, they remain in control. Now we can go to 1-hourly time frame, and if you notice, I'm talking about this high. So the buyers, they tried to push the price upwards, but they could not break the major resistance level around 1.30, the psychological mark. In fact, now we have got a new lower high with a higher high on MACD histogram. So it is hidden bearish divergence, which means there is a very high probability that pound dollar will continue in the downward direction. Now I'm going to apply Fib here, Fib extension here. So I'll take from this high to the low and the lower high. So the first level is 1.2880, the anticipated level, followed by 1.2826. And I'll move to the higher time frame one more time. I just need to draw a long-term rising trend line here. In fact, I'll move to weekly now. So here I'm connecting a weekly rising trend line, and we have one more to connect. I'll connect from this level too. So if dollar remains stronger and pound is getting weaker in anticipation of a rate cut from the Bank of England, we believe that as per the technical chart setup, the first target level is 1.2880, followed by 1.2826, followed by 1.2739 and 1.2685, and this is very close to the next rising trend line. The invalidation would be a close above, give me a second, if we get a daily closing or a 4-hourly closing higher than this level, that's around 1.3000, the psychological run number. So any break of 1.3000 in the bullish direction with a valid retest should be taken as invalidation of this bearish plan. Now, since dollar is expected to remain elevated, remain stronger until US elections or Federal Reserve's announcement, it's going to put pressure on the stock market as well. So here I'm going to talk about NASDAQ. So I've taken weekly chart here and I've applied first bullish Fib extension. So I've started from the beginning of the bullish cycle, the weekly bullish cycle. I've taken the first Fib extension covering the first bull run and the corrective pattern, which has given me the extension level at 17,442, the first one, Fib extension 61.8, followed by FE 100, which is around 19,417. And then I have applied another Fib extension covering the latest bull run. So here, this is the low I'm talking about. And the buyers have started a new journey from the Fib extension 61.8 of the previous cycle, and they've created a new high. So I've taken another Fib extension covering A, B, and C, and we got some new levels here. Now I'll move to the next lower time frame. I'll move to daily now. Now, based on daily, we have already marked Fib extension on the bullish cycle, which started from this level. A and B with C completed. We have second A, B, and C. So when I've applied multiple Fib extensions, so I got the duplication zone, and this is the zone I'm talking about. So currently NASDAQ is sitting around 20,250 to 20,400. In fact, it got rejected here. It could not establish a higher level, and now I believe that there will be some short-term weakness in NASDAQ. So a crucial resistance is established around 20,260 to 20,400. Moving lower, we got two Fib lines, so duplication lines of Fib extension, and it is around 19,417 to 19,650. So we got a zone of resistance and we got a zone of support here. Now I'm moving to the next lower time frame, that is 4-hourly chart, and on the 4-hourly chart, the buyers could not hold above this major resistance. So the resistance was broken, but it was a false breakout and it was not a sustainable move. And I can see that we have bearish divergence between the two highs, and the sellers have completed the BOS. So I'm talking about bearish divergence on MACD histogram here. Now let's move to the lower time frame, that's 1-hourly chart. And on the basis of 1-hourly chart, I can say that the pattern is completely bearish now. So I'm talking of the higher highs with equal highs on MACD lines and equal highs or slightly lower high on MACD histogram, so which is a clear double bearish divergence followed by the BOS, and it's a strong move in the downward direction. Now I'm expecting that buyers will complete the corrective pattern, and the correction will end again somewhere around 20,216 to 20,400, the strong resistance zone, and we can expect continuation in the downward direction. Invalidation, again, if we get a break above, so I need to apply Fib retracement here starting from the highest to the current low, and if we get a break above 80% or 100% mark, so 20,631 is the level to look for. So if the buyers, they come back in the market and they break this level, then the bearish plan would be invalidated. Otherwise, I believe that the sellers will push it one more time to the next support zone, that is around 19,648 to 19,417. So short-term bearish plan for Nasdaq. I've taken another dollar instrument here, so it is USD with Swiss franc. Now, since dollar index is bullish, I'm going to talk about the bullish behavior of USDCHF, the bullish pattern here. So I've taken a higher high pattern here with bearish divergence. So this is the weekly beginning of bearish cycle, and we've got double bottom here again with bullish divergence on MACD lines. So this is the end of bearish cycle. So what I've done here, I've taken fib retracement from the highest point until the lowest point, and now USD CHF is rising, and the first retracement level is FR 23.6, followed by FR 38.2. It's a strong magnetic zone here, and no signs against. The weekly pattern remains bullish here, and I'm moving to daily now. Now again, based on daily chart, we've got lower lows with MACD lines giving bullish divergence, and the break of structure happened. In fact, I've also connected a falling trend line here, which is a resistance line, and the buyers have not stopped at this trend line resistance point. In fact, they are trying to break it. So no signs of weakness in the bullish momentum on USDCHF. Moving down to 4-hourly chart, again, the buyers took the price to the falling trend line resistance area, and I've also applied a bullish fib extension. So we have got fib extension 61.8, and the buyers, they are hovering around this extension level, but the sellers are not present in the market, which means that buyers will control this instrument in the short run. Now the next fib extension level is here, the 100% level, which is 0.8732. So I believe the US dollar versus Swiss franc instrument will continue and complete its journey towards 100% extension mark, that is 0.8732, followed by fib retracement taken on the higher time frame and 161. So we can also expect between 0.880 to 8855. So any pullback should be taken as an opportunity to buy. Now moving to 1-hourly time frame. Now look at the same behavior, the bullish behavior on 1-hourly chart. So we've got some lower low pattern here with bullish divergence on MACD histogram, and the buyers, they have strongly completed the BOS, and now we can expect some retracement, pullback, which should be taken as an opportunity to buy and aim for the next resistance level, which I've already talked about. And finally, I'm going to talk about gold. Now based on weekly time frame, I've applied multiple fib extensions here. So let's zoom out a bit. So I've taken the first fib extension from 2018 low, then I've taken the next fib extension from 2022 low, and I've got a duplication zone around 2756 to 2784. Now 2784 is now playing a major resistance point, but based on weekly time frame, there are no signs against, because there is no bearish divergence which is completed. Now MACD lines, they're still open. MACD histogram, we can say yes, there are some signs of weakness, but not on MACD lines. So there could be some short-term pullback in gold. Now moving to daily time frame. Now on daily time frame, I can see there are clear signs of bearish divergence. So here we got higher highs, fib extension major level completed, 2784 or 2785. Histogram has given bearish divergence, at the same time MACD line. So double bearish divergence coming on daily time frame. So this is a sign of weakness in the gold bullish rally, in the gold's bullish rally. Now I'm moving to 4-hourly time frame. I can see bearish divergence on the 4-hourly time frame as well, higher high pattern with MACD lines giving bearish divergence, but the BOS is not yet done. And I've also applied a rising trend line. In fact, I've applied multiple rising trend lines on different time frames here. but the latest rising trend line is now breached, and the sellers have broken the support of the rising trend line with a valid retest, and it's going downwards. I got a duplication zone when I've applied fib extension in the downward direction on the lower time frame, and the zone is around 2714 or 15. So I'm expecting that gold will reach at least 2715 in the coming days, or it can go even lower. It all depends on the outcome of the election and how dollar index is going to behave. Now I'm moving to one hourly time frame. Now based on one hourly chart, I've already mentioned that the sellers have broken the rising trend line, massive push, retest, and continuation. So this is the next zone I'm talking about. This is in between 2722 to 2715. In case the selling momentum aggravates, then we can also expect that gold might reach to 2701 or maybe towards 2685. So trade cautiously because we have multiple fundamental announcements in the coming week. Now the invalidation of gold's bearish plan would be a close above major resistance at 2750 to 2757. So any close above 2757 should be taken as an invalidation of the short-term bearish plan. I'm talking only short-term bearish plan here right now. And this is the plan for this coming week. So I hope my analysis adds value to your trading plan. If you have liked my video, please show your support, give a thumbs up, and have a profitable trading week ahead. Take care. Bye-bye.